So can this calm be trusted? Suspense is building for a Fed decision, a choice between staying the course on tightening or backing off for fear of more financial upheaval. Here to help us answer those questions is Cameron Dawson, CIO of NewEdge Wealth. Cameron, good to see you.
Thanks
for coming down. The S&P 500 is down all of about 1% since the day before Silicon Valley Bank really buckled. It's up 3% from the low of early Monday morning last week. Do we take that as a show of resilience here, or of indecision, or that maybe the rescues are enough for now?
Well, I don't think all of the names in the S&P 500 are created equally, because we have seen this resilience in the overall index really being driven by the safest of the tech names. And so there is a flight to quality. We're seeing staples start to outperform a little bit, healthcare outperform. So this isn't a full risk on move. And we also see the number of names trading above their 200-day moving average fall rather precipitously. It's only now 40%, which is actually lower than it was at those December lows, which tells you some fraying under the surface.
There's no doubt. It's been relatively unimpressive as these things go 5 or 6 months out from what seemed like could be a significant market low. And of course, nothing that's happened in the last 10 days has made the economic growth picture particularly better, or the credit conditions surrounding bank lending any better. I guess the only question is, did it do anybody any favors in terms of creating a more dovish Fed than we might otherwise have had?
I think that's the hope. And I think that's the hope of what you're seeing within some of this tech trade, mostly in the speculative parts of the market, because those are the areas that are most sensitive to liquidity. So if we are in a world where liquidity starts to expand because there's issues other places, then that's that breath of relief from those speculative tech names. The problem is broad tech overall is now trading at a valuation that's above where it was pre-pandemic, and at the same valuation it was when money supply was growing at double digits. So how much of this easing Fed is already priced into valuations at this level?
Yeah, in fact, I was just looking last week that the NASDAQ 100's premium over the S&P is back to where it was at the peak in late 2021. So you could say that seems as if it's done as much as it might be able to do. On the other hand, today, that's not the dynamic, right? You have Microsoft down 3%. You have basically just a complete reversion of what was happening last week, and we're holding together so far.
Yeah, exactly. You are seeing a little bit of this give back, because the reason that Microsoft rallied isn't necessarily because of Microsoft-related things. They are AAA rated, so that certainly does help in that flight to safety. But I think that there is another tone happening in the market where we're seeing some of the cyclicals start to fade. That was a really big thing at the beginning of this year, where industrials were leading, materials were leading, but now you're starting to see that cyclical trade start to lose a lot of steam. So one of our favorite indicators to watch is equal weight discretionary versus staples, so cyclicals versus defensives, and that's starting to roll over a bit. So I think that's important to watch as we go into the next couple of weeks.
I mean, and the economic message from all that would suggest obviously more uncertainty, more downside risk than upside. And so what would you do tactically in that environment? I mean, is there anything to be done about that, or is it just to be on alert that there are just kind of fewer pistons working for this market right now?
Yeah, we were looking at our healthcare overweight and growing a little bit uncomfortable with it because it had underperformed so much. And we looked at it a couple weeks ago and decided not to change it. And I think that we were very relieved that we did that, simply because now you're starting to see a little bit of a bid to some of that defensiveness within the market. So I'd say don't necessarily chase cyclicals here. They are oversold in an uptrend. So if we see them break down, that would be a sign that the trade really is over. If they bounce a bit, maybe there's a bit more to go.